The SEPA regulation is an important step in making the single euro payments area a reality.
By setting deadlines for migration to SEPA, the European Union legislator provides planning security for all market participants.
SEPA brings a lot of benefits on the cost and on the harmonization side. So the sooner you start, the better.
The Single Euro Payments Area, SEPA, currently covers the 27 EU member states, plus Iceland, Liechtenstein, Norway, Monaco and Switzerland. In February 2012, the European legislator adopted a regulation which establishes deadlines for migration to SEPA. The aim of this European Union integration initiative is the implementation of harmonised payment schemes for electronic euro credit transfers and direct debits. By the 1st of February 2014, euro credit transfers and direct debits in the euro countries must be carried out in accordance with the SEPA regulation. In other words, as of this date, national euro payment schemes for credit transfers and direct debits in the euro countries must be replaced by harmonised SEPA payment schemes. Non-euro countries will have to make the transition at the latest by 31st October 2016. If you are a business or a public administration, what does this mean? It means that you have to adapt your payment business to comply with the SEPA payment schemes, the SEPA credit transfer and the SEPA direct debit.
At the request of the European authorities, the European Payments Council developed the payment tools to implement SEPA effectively. The SEPA credit transfer scheme gives way to a basic credit transfer service for bulk and single payments within the area of the 32 countries that shape SEPA.
The payer and the biller making a SEPA payment must each hold an account located in SEPA. The accounts may be in euro or in any other currency. The transfer of money always takes place in the euro currency.
The SEPA direct debit schemes, as any other direct debit scheme, are based on a simple concept, by which you request money from someone else and with his or her prior approval, you just credit it to yourself.
As you see, SEPA does not reinvent the wheel. It is just about making payments work even better. One of the most visible changes for all SEPA Bank customers will be the new account identifiers, the International Bank Account Number, IBAN, and the Business Identifier Code, BIC. These technical standards were developed by ISO, the International Organization for Standardization.
One of the main challenges in the SEPA implementation process is the conversion of bank data into the IBAN and BIC format. Fortunately, banks and other payment providers already developed tools to help facilitate the conversion.
All billers will have to communicate their IBAN and BIC to everybody who pays them by credit transfer. At the same time, all billers will need the IBAN and BIC of every customer who pays them by direct debit. The SEPA regulation states that after the 1st of February 2014 for national payment transactions, and after the 1st of February 2016 for cross-border payment transactions, however, payment service providers shall not require payment service users to indicate the BIC of a payer or of a payee. Another important aspect to keep in mind is that SEPA payment transactions are processed based on the SEPA data formats. The role of the data format used to exchange information in the payment process can be compared to the role of language in communication between people. Language is based on a common set of words and a shared grammar. Executing a SEPA payment transaction requires agreement on a common set of data to be exchanged in a common syntax. The SEPA data formats are a subset of the global ISO 20022 message standards.
The implementation of the ISO 20022 message type reduces complexity and the application development time required to manage our payment architecture. In consequence, we could reduce cost in the maintenance of the different national data formats, and on top, we could centralize processes within Europe and increase security.
The ISO 20022 message standards rely on the so-called Extensible Markup Language, XML.
ISO 20022 is a new language of payments. However, we noticed that there are a lot of different dialects across SEPA. We would like to see less dialects and further harmonization regarding the use of the standard. This would allow us to release even further efficiency gains.
Businesses and public administrations migrating to the SEPA direct debit schemes should also pay attention to the new SEPA direct debit mandate forms. The payer signs such a mandate, for example, when authorizing a publisher to collect direct debit payments for a newsletter subscription. Billers have to make sure that the new mandate forms signed by their customers conform to the requirements of the SEPA mandate. The SEPA regulation states that a valid payee authorization to collect recurring direct debits in a legacy scheme prior to the 1st of February 2014 shall continue to remain valid after that date. In other words, such mandates can be used to collect payments under the SEPA direct debit scheme. To realize the benefits associated with SEPA, companies and public administrations must become active. As a first step, the European Payments Council would recommend the formation of a dedicated SEPA team.
The team included members of IT and benefit departments and also accounting, treasury and payment service units.
In addition, it is important to design a communication strategy to alert customers and business partners that a company or a public entity migrates to the new SEPA payment schemes and standards. The transition to SEPA allows the streamlining of back-office functions and simplifying reconciliation. Establishing a harmonized SEPA payment infrastructure facilitates the expansion of business across national borders. Having completed migration to the SEPA instruments, companies are able to centralize accounts and the associated liquidity. The benefit of the wide geographic reach is of particular importance to public entities, which disperse benefit payments to the substantial numbers of pensioners, students and workers residing outside their original EU home country. In addition, SEPA creates one domestic euro market for public procurement, that is, the purchase of goods, services and public works by public administrations. SEPA therefore empowers the public sector to select the most competitive service providers in a far wider marketplace.
Also, the migration to SEPA is a challenge. I do believe that the long-term benefits of a harmonized European payment market exceeds the short-term efforts to get there.
The time to act is now.